Hello, and welcome to Captain Forex Market News, your go-to source for the latest updates, insights, and trends in the world of foreign exchange. Let's dive into what's moving the markets today, offering sharp analysis and actionable information to help you navigate the global market landscape. Financial markets received a significant batch of economic data today, highlighting growing inflation pressures alongside a labor market that continues to show strength. The most important report was the Producer Price Index, PPI, a key measure of wholesale inflation. The May PPI increased by 1.1% month-over-month, while annual PPI rose to 6.5%, indicating that businesses are facing higher production costs. Core PPI, which excludes volatile food and energy prices, also increased by 0.4% monthly and 4.9% annually, showing that inflation pressures are broadening across the economy. The strong inflation readings suggest that companies continue to experience rising costs for materials, transportation, and energy. This could eventually lead to higher prices for consumers if businesses pass those costs on through higher retail prices. As a result, investors may become concerned that inflation is proving more persistent than previously expected. Meanwhile, labor market data showed a mixed picture. Initial jobless claims rose to 229,000, slightly above expectations, indicating a small increase in the number of people filing for unemployment benefits. However, continuing jobless claims remained relatively stable at 1.795 million, suggesting that workers who lose jobs are still finding employment opportunities. Additionally, the four-week average of jobless claims remained low at 219,000, reinforcing the view that the U.S. labor market remains healthy despite slowing economic growth. For financial markets, today's reports create a challenging environment. Higher inflation reduces the likelihood that the Federal Reserve will cut interest rates in the near future. Investors may now expect interest rates to remain elevated for a longer period in order to combat inflation. This outlook generally supports the U.S. dollar and Treasury yields while creating pressure on stock markets, particularly growth and technology companies that are sensitive to higher borrowing costs. Overall, today's economic data can be summarized as hot inflation and stable employment. Inflation remains the primary concern for policymakers, while the labor market continues to provide support for economic activity. Traders and investors will closely monitor upcoming Federal Reserve statements and future inflation reports to determine whether these trends continue during the coming months. The market reaction suggests a cautious outlook, with investors balancing strong economic fundamentals against concerns that inflation may remain elevated longer than anticipated.